The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. President Donald Trump suspended the 25% tariffs he imposed this week on most goods from Canada and Mexico, the latest twist in a fluctuating trade policy that has whipsawed financial markets and fanned worries over inflation and growth slowdown. The exemptions covering the two largest U.S. trading partners expire on April 2, when Trump has threatened to impose a global regime of reciprocal tariffs on all U.S. trading partners. U.S. Commerce Secretary Howard Lutnick told CNBC on Thursday the U.S. will move the reciprocal tariffs on April 2, and hopefully Mexico and Canada will have done a good enough job on fentanyl, but if they haven't, this will stay on. In response, Canada will hold off imposing counter tariffs on $125 billion in U.S. goods. Finance Minister Dominic LeBlanc said Thursday first phase of Canadian retaliatory tariffs on $30 billion worth of U.S. goods went into effect Tuesday after Trump slapped the 25% levies on most Canadian imports into the United States. U.S. Treasury Secretary Scott Bessent laid out the Trump administration's ambitions to reshape international trade relations and justified using tariffs.
I'm excited about the dynamic leadership that the president has put in place across the financial regulatory agencies to drive this process. Our nation's largest banks, many of whom are represented here today, role as financial intermediaries has been weighed down by unduly burdensome regulatory requirements and a broken supervisory culture. Backward-looking policies in response to an undercapitalized system predating the global financial crisis almost 2 decades ago should not drive today's approach.
The European Central Bank cut interest rates as expected on Thursday and kept the door ajar to more. It's even as looming trade war with the U.S. and plans to boost military spending drive Europe's biggest economic policy upheaval in decades. Easing for the 6th time since June, the ECB lowered its deposit rate to 2.5% in a nod to slowing inflation and faltering growth, and said that rates were still restricting growth, even if less so than in the past. That wording suggests that more rate cuts may be coming, as the bank has long declared that restriction is no longer necessary, with inflation at 2.4% last month, safely heading back to its 2% target this year. ECB President Christine Lagarde pointed to phenomenal uncertainty affecting monetary policy.
We have huge uncertainty. Some people have used the adjective phenomenal uncertainty, and we debated as to whether it was high and rising, but suffice to say that it is all over. So we have risks all over, uncertainty all over. We know that tariffs, and particularly if there is retaliation, are not good at all and are net negative on pretty much all accounts. But that's my personal view. Although I think we around the table of the Governing Council, we all agreed that it was net negative when it happens, and it's even negative before it happens, because the uncertainty that is generated and the undermined confidence that results from just the threat of those tariff increases and potential retaliations are putting a brake on investment, on consumption decisions, on employment, hiring, and all the rest of it. Increasing friction in global trade is adding more uncertainty to the outlook for euro area inflation. A general escalation in trade tensions could see the euro depreciate and import costs rise, which would put upward pressure on inflation.
Well, European shares fell on Thursday as elevated long-term bond yields pressured equities and outweighed optimism around the European Central Bank's decision to cut interest rates. Meanwhile, U.S. President Trump last week floated a 25% tariff on imports of European cars and other goods without offering further details. One analyst said that there was, quote, predictability in this unpredictability, unquote, seeing as Trump is not an ideologue who holds his ground.
Trump is like the April weather in his policy changes, but there is also predictability in this unpredictability. He is not an ideologue who holds his ground. You can see from the example of Mexican tariffs that he wobbles back and forth. This means that if we also offer the American president something here, for example, buying more liquid gas, more agricultural goods, then the tariffs will not come as strongly as he has always propagated, because we know full well that tariffs also make life difficult for America through more inflation, rising interest rates on loans, and less prosperity.
Asian stocks tumbled, tracking losses on Wall Street as uncertainty over U.S. President Trump's shifting tariff policies rattled markets. Australia and Japan dropped over 1.5%, while Chinese stocks hovered near a 4-year high. Despite U.S. market volatility, investors have been pouring money into Europe and China, with Hong Kong-listed Chinese stocks surging 23% this year, driven by AI optimism and Beijing's expected stimulus. At a briefing on the sidelines of China's annual parliamentary meeting Friday, the foreign minister issued a veiled message to the U.S. in the midst of geopolitical turmoil. Washington's withdrawal from international institutions, part of a clear appeal to Europe and global South countries.
Major powers should assume international obligations and fulfill their responsibilities as major powers. They should not be profit-driven, and they should not bully the weak.
Wang also said Beijing will resolutely counter pressure on the fentanyl issue, warned Washington not to respond with hostility, considering the various assistance it provided the U.S. over the years. Meanwhile, Bitcoin also slipped as details of a U.S. strategic reserve disappointed. Traders remain on edge as geopolitical tensions and mixed U.S. tariff signals fuel market swings. We have to pause for a few reminders, but when we come back, we'll ask the British Chamber, how do British businesses truly get a fair deal in the Philippines? We'll bring you that business brief in a moment, only on the Bilyonaryo News Channel. Welcome back to Business Brief. The private sector is intensifying efforts to empower women, not just in the workforce, but in leadership and entrepreneurship. Our correspondent Soo-Jin Kim joins us on the line for details. Soo-Jin, go ahead.
Yes, Raine, industry leaders are reaffirming their commitment to breaking barriers and creating more opportunities for women. SM Group is expanding initiatives to support women's professional and personal growth, promoting more women into leadership roles, strengthening mentorship programs, and enhancing work-life balance policies. Meanwhile, in the food and hospitality sector, women continue to rise in leadership positions, and at Wildflower Hospitality Group, women hold the majority of leadership and managerial roles, reflecting a commitment to equal opportunities. Beyond corporate leadership, Wildflower actively supports women entrepreneurs by sourcing ingredients from women-led farms. With women leading the majority of MSMEs in the Philippines, the Department of Trade and Industry is strengthening policies to ensure their growth and protection. Beyond entrepreneurship, the agency is also safeguarding women as consumers, ensuring fair pricing, product quality, and financial inclusion. As companies and government agencies alike scale up their support for women, the push for gender equality in the business sector continues to gain momentum. And those are latest updates for now. Back to you, Raine.
Looking forward to more of those pro-women policies. Thank you so much for that report, Soo-Jin Kim. The United Kingdom is doubling down on its economic partnership with the Philippines, with British investors eyeing green energy, tech, and food security. But how will the Marcos administration's policies on the ease of doing business, tariffs, and digital transformation impact UK capital flows? Today we speak with British Chamber of Commerce Philippines Executive Chairman Chris Nelson on the outlook, the risks, and the next big UK investments. Chris, hello, and good to see you again.
Yes, good afternoon. I'm very good to see you again, Raine.
Hi. So, coming off some fresh economic data out of the Philippine government, of course, we have the inflation as well as unemployment. The Philippine peso also remains under pressure. Inflation is eased, but remains a concern. Do you see these macroeconomic risks as factoring into UK investors' decisions?
So if I look at inflation, it was good news. The actual surprise, it was actually much lower at 2.1. I think there was a general consensus of about 2.5%. So that's actually a very good performance. And if you look at the figures, it was driven by a drop in rice prices. So all credit to that. In one context, I would just make a point that actually meat inflation actually went up 3 points, 3%. So in that respect, we would actually urge continuing action to obviously assist in terms of the supply of meat. As you know, the British Chamber, along with its partner AHDB, has been particularly active in getting British pork exports to the Philippines. And in that context, we would strongly urge the issuing of all import licenses, particularly those related to the minimum access volume. But I do think the performance of the Philippines is good. It also means there is a potential, obviously, for the BSP at some stage to ease. And of course, that will assist GDP growth rate. And that, again, all makes the Philippines an attractive prospect. And again, as we stress, an entry to the Southeast Asia as well.
Right. And the British Chamber, of course, has been very vocal about maintaining the minimum access volume quotas and lowered tariffs on food imports, given the government's inflation and food security concerns. Do you foresee any policy changes that could impact UK food exports?
Well, look, we're hoping to have further discussions. We've had discussions on this with the Department of Trade and Industry. We very much welcome that. And we also have a scheduled meeting in this month with Secretary Lagarde of the Agriculture, and we very much appreciate that. And we'll obviously discuss that. I think the key is the following. One, the import licenses linked to the access volume, obviously then allows those people to import at the lowered tariff rates. And we've been a strong supporter of the Executive Order 62 issued by President Marcos, which extended those tariffs until the end of his term, which of course is 2028. So therefore, the other thing we would say at this particular moment, that obviously look at the total volume of MAV, because they were set, as we understand it, back in 1996, when obviously the population was a lot smaller. But overall, I think the key here, Raine, is to keep constant supply. We believe, and we've supported food security, and in this context, meat is one of those. And we look forward to continue helping the Philippines with its challenge, or working to keep inflation lowered, which obviously gives a lot more flexibility to the government.
Totally, and we see that happening. Now, the UK remains the Philippines' 60th or largest trading partner, is that correct? With total trade at £2.8 billion as of the third quarter last year. That's about 2% lower from the previous year. Are there factors that contributed to this dip, and how do you see this trend shifting this year?
I see the trend going up. I mean, 2% in the scheme of overall is probably not a lot. It probably depends on certain, shipments at that particular time. So overall, we're confident that that actual trade performance continue to grow. It's been growing. The Philippines and the UK have very good relations. I think we're now in our 78th year of diplomatic relations. That continues to grow. The actual trading ties have been upgraded, so there'll now be a joint economic committee known as JETCO, and that will actually have its first meeting, as we understand, on the 17th of March in London. And that's a reflection of how the two countries are working closer. And on that context, we'd also highlight the UK has joined CPTPP. And in that, we know that the Philippines is studying that, and we would strongly urge the Philippines to also join, because that would also give an expanded territory and further assist in our trading arrangements.
Latching on to the JETCO topic, the first ministerial JETCO meeting is happening this month. What key trade and investment policies are on the table, and are there outcomes that you're hoping to see?
Sure, I think they're going to be discussing where is the key areas for working together. Renewable energy is going to be very high on that list. Last year, the UK, through Axis Fund, was one of the largest investors in renewable energy in the Philippines. I'm sure infrastructure will also play a key part in that. And then again, linked to that is what are the opportunities? I'd just like to also highlight the recurring discussions with PEZA, the Philippine Exporting Zonal Authority, Economic Zonal Authority, and in that context, they're looking at an investment mission in the UK, in June, and we're going to look very much forward to supporting that. So I think all those areas will be covered. I think the Philippines and the UK will also, of course, discuss, as I've said, CPTP and what opportunities that allows for, and how we can further facilitate UK companies to trade and invest in the Philippines, and vice versa. Let's not forget, we launched about 2 years ago the Developing Countries Tariff Scheme, for which the Philippines clearly benefits by, and we want to see that trade continue.
Mm-hmm. Talk about PEZA. The UK is a top emerging investor in the Philippine economic zones. British firms contributing 34 billion pesos since 1995. Are there opportunities that the upcoming PEZA investment mission could unlock for new British businesses?
Sure, I think that when they go there and we go there together, I'm sure, they will highlight the opportunities that the More Create Act will give them. What are the incentives to be in PEZA, and how that will continue to develop, and what opportunities they have. And again, you know, coming into the PEZA zone, of course, there's a commitment on the export side, but it also gives you access across into Southeast Asia. And we're working closely with Director General Panga and his team. And we're very confident this will bring more companies in. And again, highlight opportunities in the Philippines, which we've been doing consistently. And it all ties together, you know, having the JETCO, having PEZA's investment mission, and having the work that we've been doing ourselves through our corresponding chambers of commerce in the UK. And even now, in March as well, there will be a roadshow by the UK. We're not there physically, but we've also sent, obviously, our video and our contacts. And that will also assist in highlighting the Philippines to overall investors. And that's work led by Business and Trade Department, led by, in this particular case, Martin Kent, the Trade Commissioner for His Majesty, who's based in Singapore.
Is there a particular target, a specific goal in terms of British investments in the Philippines that you're targeting? Or have there been any preliminary commitments from British firms as to how many might locate here in the Philippines?
I'm sure PEZA has that, and we intend to work on those details together. I think at this stage we don't have an overall target, but we want to see the UK companies continue to grow. UK companies see the Philippines as a very interesting, dynamic market, based upon, obviously, its large, talented workforce, but also it's young and dynamic. So this will give great opportunity in certain key sectors we've also led on, which is food and beverages, but also, of course, the need of the country, as we've talked about, in renewable energy and in infrastructure, and all of that comes together. So I believe that we will have a closer or more greater feel of targets as we go and progress our discussions, but we're very excited by it, and we welcome, obviously, PEZA's view to use London and come for that investment mission in June.
Among the sectors, perhaps tech and AI collaboration has risen up to be one of the more exciting ones. So with the UK Southeast Asia Tech Week in Manila coming up, where do you see the strongest potential for UK-Philippine collaboration, especially in AI and cybersecurity?
Well, I would second very much. I'd like to emphasize cybersecurity. The UK has always been known as having a very strong area in cybersecurity. We have strong representation in our chamber with two British companies, that's CyberQ and NCC. We'll be actually holding a cybersecurity event ourselves on the 25th from 4 o'clock onwards, which ties in with Tech Week, which is 24th and 25th. So I think cybersecurity will be a key feature. And along with a lot of the talents that, UK companies can offer, we're very strong in terms of software. We're very strong in terms of the banking sector. But I think cybersecurity, I have to emphasize here, and in that context, if I may say, Ray, we would strongly urge the Philippine government, which is highlighted as one of its priority legislations, to pass the Cybersecurity Act. That we think will further strengthen that area because it will encompass a lot more areas, and that will be a great benefit to the Philippines and to, obviously, investors and consumers.
Chris, of course, we know that the ICT Secretary Ivan Uy has resigned. Do you feel that the activities that you have lined up might be affected, or the momentum that you've built in the activities in AI and cybersecurity might be affected by this departure?
Look, I mean, we wish, obviously, Secretary Uy all the very best. Unfortunately, we can't obviously meet him at the Tech Week, but I think it won't slow that down. We know when we deal with all government departments in the Philippines, they have a very strong level of undersecretaries and assistant secretaries. So we will think that momentum will continue forward. As you can see here, we've working very closely with the Philippine government. We are fortunate enough to have the Secretary of Trade and Industry, Secretary Roque, and I think that will continue, and I'm sure that will be supported by the DICT department, as we always have been. We have good relations, as does the British Embassy, with the Philippine government departments, and we actually appreciate how open they are and how closely we work together. So, again, we wish all the best to Secretary Uy, and we look forward to continuing to help the Philippines with its cybersecurity and its, obviously, tech work.
As a final question, of course, the Philippines wants to position itself as a regional investment hub. Lots of comparisons lately between the Philippines and Vietnam and Indonesia in terms of foreign investments. To your knowledge and your experience and in your consultations with your counterparts across the region, how do you say the Philippines might compare to the ASEAN markets in attracting British businesses?
Well, I mean, I think it's one that we're constantly working for. I mean, look, the British Chamber, along with other business groups, are constantly advocating for further liberalization of the economy. I mean, during the previous administration, we saw the passage of the Retail Trade Act, Foreign Investment Act, and the Public Services Act. And we've seen others obviously been continuing on that momentum under President Marcos. So we wish to continue and see that economy further opening up. We are an ARTA champion, that's an anti-red tape authority. We work closely with Director General Perez, and we want to see that continue. We have to keep on moving that forward. And one of the other acts that we want to see passed is the E-Governance Act. Companies, when they want to do business, one of the biggest concerns, because we obviously dealt a lot with small to medium-sized enterprises, was how is the bureaucracy, how can they do business easily, rather than obviously have to go through various bureaucratic requests. I think there is a good conscious awareness of that. We had an event recently which we focused on the ease of doing business to stimulate growth, and we will continue to work with ARTA and move that forward. Has there been progress? Yes. Could we do much more? Of course, yes. And we will continue to work with the government, and I'm sure the British government as well will assist in that context.
The push continues. The UK, of course, remains a strong economic partner for the Philippines with green energy, tech and food security, leading the investment agenda. But policy clarity and macroeconomic stability, of course, will be key to sustaining investor confidence alongside the ease of doing business. Chris Nelson, Executive Chairman of the British Chamber of Commerce Philippines, always a pleasure to have you. Thank you so much for joining us today. We appreciate it.
Thank you, Raine, and a good evening or good afternoon to you and your viewers, and a very good weekend ahead.
Happy weekend. Well, despite inflation cooling to 2.1% in February, one analyst says the Bangko Sentral ng Pilipinas may not need to wait for the U.S. Federal Reserve before slashing interest rates. HSBC ASEAN economist Aris Dakanay told the Bilyonaryo News Channel's Business Brief that the BSP's latest inflation data, which came in lower than expected, gives policymakers more breathing room. Suggests that the Philippines should let go of the Fed and instead align with ASEAN economies that are already easing their policies. Lower rates could mean more accessible credit and economic expansion, but also a weaker peso, which the BSP must balance carefully. The Hanay argues that the peso can absorb some depreciation, making room for rate cuts that can boost investments and household consumption.
We do think the peso will weaken come the second half of 2025. But I want to add to that statement. So it's not just let it go. It's not just let go of the Fed. It's let go of the Fed and follow ASEAN. So let's compare it to a scenario where we do not let go of the Fed. If we keep interest rates steady, but everyone in ASEAN continues to cut interest rates.
Philippine shares extended its winning streak for a fifth straight day. The Min Index closed out Friday higher by 1.25% to 62.98, advancing alongside Chinese shares. And despite U.S. President Donald Trump's tariff announcements, creating uncertainty in global markets. The services sector drove the rally, while top advancer and most active stock, Razon's port operator ICTSI, continued its gains for a second day, share prices rising as much as 7.3% on positive earnings results. Traders say the momentum continues to be bullish and may be testing the 6,300 level. Advancers outperformed decliners 105 to 79, while value turnover was at 6.3 billion pesos. Meanwhile, at the foreign exchange market, the peso is currently trading at 57.35 to the US dollar, weaker for the first time this week than Thursday's close of 57.32 after a slew of economic data out this week, ending with the January jobs data. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again on Monday as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on time.